Hi friends, thank you for having me here. Today I'll talk to you about our strategy for an upcoming NFO, Mirae Asset Flexi Cap Fund. However, before that, let me give you a little brief on our take on markets. In the near term, the markets could remain volatile as the markets will grapple with two questions. First, what would be the impact of the impending recession on the global markets? Second, China reopening and how the foreign capital would behave. However, we remain quite constructive on the Indian markets for the mid to long term. There are a few reasons for that. Let me list them one by one. First, the inflation seems to be trending down, leading to the expected peaking of the rate hike cycle. Second, rural markets are expected to revive. Basically, when we say that the rural markets are expected to revive, there are a few reasons for that. One, there have been 4 consecutive years of normal rainfall. Secondly, this year the Rabi sowing is quite good. Third, this year, considering it is a pre-election year, there could be increased government spending on the rural sector. Third point, the Indian corporates have deleveraged substantially and many of the industries are expected to see capex uptick. Fourth, and the final one, the tax collection continues to remain robust, thus helping the government capex program and sustaining the fiscal deficit at the targeted levels. Finally, on account of these 4 points that I just mentioned, the earning growth trajectory of the Nifty 50 companies are expected to remain strong. So here I'll share with you 2 analyses that we have done. First, on the sector leadership. So on the sector leadership, if you go back in history, you will see it is not constant. It can be very volatile, which can be difficult to predict frequently. Also, sector outperformance or underperformance could be back-ended even with improving fundamentals. Just to elaborate this point, pharma was a darling of the markets until 2015, featuring in the top performing sectors regularly. However, it was only in 2020, basically it took 5 years for the sector to come back to the top. Further, if you look at BFSI, the balance sheet started to strengthen from 2018-19. However, 2022 was the first year when we saw meaningful outperformance of the sector versus the benchmark. Thus, as a fund house, we may not take big sectoral calls. If you look at the past 10 years, you would find that 5 stocks have moved from small cap to large cap, generating a return of 42% CAGR over this period, while 25 stocks have moved from mid cap to large cap, generating again a return of 26%. This data clearly tells us that if one identifies the stock early and hold it over a long period of time, there is substantial alpha that one can generate. What we are trying to say here is that Flexi Cap with no regulatory restriction to have any particular percentage of holding in a particular cap gives the freedom to hold high conviction names throughout its growth journey. Thus, looking at both the data points presented, we believe bottom-up stock selection and holding it for longer period of time basis business merit is what a Flexi Cap allows you to do, and this is what we intend to deliver. Now, coming to the stock selection or how we'll go about stock selection process in the fund. Our portfolio strategy is centered around participating in high quality growth businesses up to a reasonable price and holding the same over an extended period. Our belief is that longer term earning is what moves the stock. Hence, the focus would always remain on how the long term earning for the stock moves. In terms of our investment universe, we have a coverage of approximately 600 stocks across sectors. We follow a BMV framework of stock selection, which would stand for business, management, valuation, to explain each of them individually. Coming to business, business is basically to understand how scalable the business can be, what is the opportunity size, what is the capital requirement to grow that business. Secondly, coming to management, management basically means the thought leadership that the management brings to the table. What has been their capital allocation strategy? Has there been any CG issues, corporate governance issues around in that business? Third, and the most important thing is valuation. Basically, what we try to do here is ascertain whether a stock has enough margin of safety or is the stock pricing in much ahead of its time. How do we try to do that? Basically, we run various valuation models like reverse DCF, DCF for most of our companies to ascertain what is the long-term terminal growth that the stock is currently factoring. This helps us to have a good mix of both growth and value stocks in the portfolio. Thank you so much for your time. Happy investing.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.